What is up, freaks? It's your boy Marty Bent here on a Friday morning, here to introduce you to this week's episode with Alpha Zeta. Our good friend has been on the podcast before with Bitcoin Tina. Earlier this summer, we talked about the inversion of the yield curve. We caught up with Alpha Zeta as he was in town from Brazil last week on Halloween. Had an incredible conversation, jumped into his career on Wall Street, his views on Bitcoin volatility in particular, the types of products that can be built around Bitcoin moving into the future, and the nature of Bitcoin's disruptiveness. I think you guys are going to love this one. I loved it. It was a great conversation. We had a lot of fun. This episode of Tales from the Crypt is brought to you by the Cash App. As you know, Cash App is the simplest way to send and save money, and now it's the simplest way to try to grow your money. Introducing Cash App investing. Unlike investing tools that only let you buy entire shares of stock, Cash App lets you instantly invest as little or as much as you want. You can sell slivers of shares in the Seychelles. All right, we came up with this yesterday on RHR. Actually, we didn't come up with it. A freak shouted out overnight. You can now get slivers of shares. So she sells slivers of shares in the Seychelles. All right, that's what we're working on, the Cash App. What I'm trying to say is you can buy a fraction of a stock, just like you can buy a fraction of a Bitcoin. You can stack sats, now you can stack SONs, or excuse me, we're buying slivers of shares. Okay, and because Cash App is directly connected to your bank account, there are no 4 to 5 day waiting periods for inbound transfers, so you can start investing today. Brokerage services are provided by Cash App Investing, a subsidiary of Square and member SIPC. As always, use the code STACKINGSATS. You're going to get $10. $10, not $5 anymore, freaks. $10. If you haven't signed up yet, take advantage of this, if anything, to get $10 worth of sats. And they're also going to send $10 to Owls Lacrosse. Ooh, Owls. All right, download the Cash App today from the Apple Store or the Google Play Store. This episode is also brought to you by our friends at Casa. You guys know all about them already. Does your key setup have a single point of failure? You got to ask yourself these questions. Do you have a sovereign recovery package? Have you thought about this? Because you always control your keys with Casa. You can never be denied access to your Bitcoin, and access to your funds can never be frozen, even if Casa were to go out of business. This includes a sovereign recovery. They're multi-sig packages. They're tiered packages. So if you engage in one of their multi-sig setups and they go bust as a company, don't worry. You can recover it by yourself remotely, doing your own setup. On top of that, they're very privacy focused. They've designed their business to require no KYC, no altcoins, 100% Bitcoin, no fees on your Bitcoin. They have packages that you'll pay. And if you use the code TFTC, you're going to get up to $250 off your Casa membership. All this comes with a full set of hardware wallets for your multi-sig, plus the Casa Node 2 now, with Faraday bags and early access to all future Casa products. If you're in the Diamond or Platinum membership for serious hodlers, it's going to net you 24/7 VIP service, dedicated client advisor, and a custom onboarding OPSEC plan. So please go to keys.casa/keymaster. Check out their multi-sig. If you want to email them directly, email them at membership@team.casa. And ask them your hardest OPSEC questions. All right, freaks. Enjoy this episode. It was a spooky Halloween episode. I'm getting it out a week later. I think you're going to like it. Enjoy. Take care.
Tales from the Crypt.
What is up, freaks? Welcome back to Tales from the Crypt, and happy Halloween. I don't know if this will be posted on Halloween, but happy Halloween nonetheless.
Happy White Paper Day.
Happy White Paper Day, is true. Happy 11th anniversary of the White Paper. We're here catching up with a friend who was on the podcast a few months ago. He was remote, though, when we recorded that episode. Very happy to have him here in person to jump more into his story. We talked about the inversion of the yield curve when he was first on the podcast. I'd like to reintroduce you freaks to Alpha Zeta. Alpha.
What is up, freaks?
How we doing, dude?
Good. Straight from Brazil to Brooklyn, to an undisclosed location here in Brooklyn. So happy to be here with you guys.
Well, happy to have you. Very happy. Again, happy Halloween. Halloween's a big holiday in your family?
Yes, it is, for sure. You know,
Yeah.
my My daughter just loves it, so that's why we're here, believe it or not.
And yeah, it's also white paper day. 11 years since the white paper. I wrote about it this morning. It's hard to believe. Where were you guys when the white paper? What were you doing on Halloween 2008?
I saw your picture from Halloween 2008. Fucking fantastic.
Yeah, I have photographic evidence of what I was doing that day. It was a beautiful day for me. I was a senior in high school, and we were able to dress up for Halloween that day, and it just so happened to be also the day after the Phillies won the World Series. So I was at the game the night they won the World Series and had celebrated after. So that picture you saw of me in the Lieutenant Dangle costume was after celebrating a World Series victory with no sleep at 17 years old. So that's what I was. I was 17 years old. It's crazy to think Bitcoin has been around for almost more than a third of my life at this point.
I was trying to figure out if I had the job at Wall Street in 2008 at this time. You know, it was like craziest time in Wall Street.
Yeah, so that's your background. Let's jump into it. We touched a little bit on it on the first episode with Bitcoin Tina, that freak. But what's your background? How did you come to find Bitcoin? Let's jump in more to your story.
Yeah, and hopefully people can understand me now, because last time the mic was bad, and if my accent was probably double hard to understand anything. But yeah, I'm Brazilian, as I said. I grew up in Brazil. And then I came to the US, where I worked in different firms in Wall Street, some of the big ones. Trading capacity, did some fixed income trading, then did some sales and trading as well, covering ultra high net worth individuals, family offices, mostly on the side of derivatives, but did a little bit of everything. That's the thing with sales and trading, right? To just touch a little bit of everything, cross asset class. And then 2015, end of 2015, that's when I started looking into Bitcoin, and like everybody else, just went down the rabbit hole, and still learning a lot. There's still a lot that I need to learn, but it still amazes me, how much it keeps growing, and I think that we're starting to see more and more interest from other people, like as I mentioned, from family offices. I'm starting to see people asking about it, and it's just exciting times ahead of us.
Yeah, and you were describing to me earlier that you got Bitcoin sort of innately because of your experience growing up in Brazil. Let's jump into that.
Exactly. Yeah. So growing up in Brazil in the 80s, we had hyperinflation. When I'm talking about hyperinflation, it was people don't realize how crazy it really is. Like money would literally lose value overnight. I remember my mother giving me money for lunch at school and telling me, like, you got to spend that money, don't bring anything back, because if you do, by next week, this won't be worth anything. And also remember, like, 30th of the month, supermarkets were packed because everybody would get their paycheck, and the first thing they did is that they would convert the paycheck into goods. So they would buy food, they would buy anything that they could. And sometimes we would walk around the supermarket, and there was a guy with like these pricing machines changing prices as you walk through the supermarket. So my mother would run around like, oh, we got to go ahead of that guy so that the price doesn't change as we're walking through. And it's very hard to live in a system like that, because you literally can't hold any money. And the banks started adapting also very quickly. First thing that we saw is that any real assets became dollarized very quickly. So real estate, all of that, cars, was all priced in dollars, right? So the local currency really didn't have any value. And then the banks also, you would leave money in banks, and the banks would pay you daily interest, overnight interest on your money, because otherwise people just wouldn't leave the money in the banks. But that was, of course, growing up in something like that becomes kind of like enrooted in you. And that was, I think, the first thing that really, when I saw Bitcoin, like, okay, I see the value on this exactly because of that. How did
Hyperinflation affect like the psyche of the Brazilian people? Do you remember the lead up to the hyperinflationary, the bout of hyperinflation, and how quickly people's mindset changed, or did it change quickly? Was it hard for people to believe at first?
Yeah, as far as I remember, it was already very bad from the beginning. Like when in the early 80s, it was already very bad. So, I think people adapt very quickly because they have no choice, right? They see money disappear in front of them, and then they adapt very quickly. But there is, up until today, you see that there is kind of a loss of, I think, confidence in government and the financial institutions because of that time. And hyperinflation still, I think, really, really tied into all Brazilians. Like, we see inflation very differently than anybody else in the world, right? Because again, we live through it, and then the root was completely monetary, as you would expect, and the fixing it was also, fixing the monetary system. And in '94, we had a new economic plan. And slowly, I think the monetary base was fixed, and then the economy took off from there. It was at least much better than it was before. But those were very interesting times, and because of that, there are two things. When people ask me what got you into Bitcoin, I think that's the first one, and the second is the fact that which is related is I think it was, I don't remember exactly the date, but we went through a couple of economic plans in Brazil where they pretty much just froze savings accounts. So you had money in saving accounts, you couldn't take your money out. It was limited. You could take, the government would say, I can take $100 out. Pretty much what's happening in Argentina right now, same thing happened. And I remember vividly, my father struggling, trying to make ends meet because, he didn't have access to his savings. He couldn't take money out, right? And that took, for a few months, we really didn't have access to any money. So you can imagine. And, we're not talking about something, that's 60, 70 years ago. This is literally 30 years ago, right? 40 years ago, and it could definitely happen in other countries.
Last week in Argentina, like you
exactly.
said. It is insane like that. And so for your father in that situation, how pissed off was he?
Yeah.
Was he pissed off or sad, angry, a mixture of all?
I think, I remember him being very, and I wouldn't say angry, but he was worried. Yeah. You have these memories that you kind of remember exactly where you were and exactly how it was. This is one of them that I remember where I was sitting. I remember him watching the TV with my mother, in the night, and the woman that was the Minister of Finance at the time coming to TV and making this announcement. I remember that vividly because I remember their reaction. And again, it was really, really tough, and I think something that.
What was their reaction?
He was really pissed off.
Yeah.
How come, how I'm gonna, I needed the money, right? I was waiting to take the money out. And that's the advantage of Bitcoin, right? Nobody, I have my treasure and it's available anytime I want, everywhere I go. My grandparents also escaped from World War II, coming from Europe to Brazil. And when they did, they couldn't take anything with them. They left behind, all the real estate. My grandfather used to tell me that he had art that he had to leave behind, right? All of these things that were store of value for him, but he just couldn't take, as he was escaping from the war. So Bitcoin fixes this, right?
And Bitcoin fixes this, but going back to the hyperinflationary battle you were describing in the grocery store, there are certain goods that are better stores of value.
For sure, absolutely. So
your shopping would be strategic during these times.
Yeah, you buy things that were non-perishable and that you could store, and people would have huge refrigerators at home as well. I remember my mom had 3 refrigerators at home because she would get everything that was perishable she needed to get and then store it there for the whole month. We go once a month to the supermarket. You can imagine, you gotta get everything, right? And then we're inside, and a high preference for canned goods and all of that wouldn't get perishable during the month.
So is there a transitionary black market currency situation going on between the 80s and '94 when you sort of got everything?
There was, a black dollar market. There are people that made money out of just converting the local currency into dollars. They're called the doleros. They're just dollar guys, right? And people would go into these places and convert their currencies into dollars because dollars they knew that they could hold physical cash, right, somewhere at home. And there's some of these guys made millions and millions of dollars just by converting local currency into dollars, because again, that was the preference for the people to hold dollars.
And then were they accepted in stores in Brazil? Or?
It technically the stores couldn't accept it.
Mm-hmm.
So you couldn't go to a supermarket and just use dollars. that would have been probably the right answer, but you couldn't. So people would still have to convert back and then pay things. But for anything like real estate transactions were all done in dollar terms, right? They could be settled in local currency, but at the end of the day, we were talking dollar terms. The agreed price would be in dollar terms, right? So pretty much the economy in terms of price reference, which is really what matters, it was a dollar economy. For many, many years, it was like that. Up until today, you would see people that, would, I know some of the large families in Brazil, and pretty much all of their assets, when they do the accounting of their assets, they still do it in dollar because, again, first, they're used to that, and second, it's a much more stable currency than the local currency.
Yeah, no, that's something we were discussing over breakfast too, is the dollar's probably going to strengthen a lot going forward if all these weaker currencies keep falling. And
yeah, I think that, and this is a theory that a lot of people talk about, is the whole world is not in a good situation. So in comparison, the dollar is still much better than anything else in terms, I think, of economic strength and also in interest rates, right? So interest rates here still being, at least in the developed countries, being fairly high. You're still going to see dollars coming in, and we all know it's wrong. We all know that at some point this is going to revert. We all know that assets are inflated. We all know all that story. The question is when it's going to turn, and the answer is that nobody knows, right? I've been definitely wrong about this for a couple of years. I've been thinking that stock markets are trashed for the last 2 years, and they just keep getting trashed. Exactly. So it's free money, so.
Let's take a step back and talk about your Wall Street experience a little bit. So what was it like, number one, moving to America from Brazil, and was there any culture shock? What was that experience like? And then number two, what was it like on Wall Street? What did you see? Any war stories?
Yeah, well, that's a lot of things. So first on the cultural difference, I think America is probably the place in the world that it's most open to people from the outside, right? I still look back and I'm amazed that, somebody from my background, I came from Brazil, right? And, I landed in Wall Street. And at some point I was managing teams of, pretty much everybody was American, everybody was older than me. And, apart from here and there, there weren't really big problems, which goes to show, I think, how much the U.S. is open to immigrants and open to people from outside, right? And I hope that continues to, I know, recently it hasn't been like that, but I hope it continues because, I'm living proof that I think that for the rest of the world, at least, there's a lot of value in coming here, right? And I think for America as well, this is a country that was built with immigrants, right, if you really think about it. So in terms of culture, there are differences. I think that, whenever you go to a new country, you have to adapt to small things, really understand what the micro messages are, right, in the corporate environment and all of that. But also Americans are very practical, so it's very down to the point, there's, people are very open, very honest, very transparent. Sorry?
Very forthright, especially on Wall Street.
For good or for bad, which I actually appreciate that. Brazilians are just the opposite, right? And I'm generalizing maybe a little bit, but we're just the opposite. Like Brazilians, won't tell you straight to your face that they don't like you, they don't like something, right? You kind of have to read between the lines. And in the U.S., there's no bullshit, right? You go straight to the point, and you put the differences on the table, and that's it. Particularly in Wall Street, right? You don't have time to waste, and you move on. So I really, really liked working here because of that. You go to meetings, right? Small example: you go to a meeting with a client in Brazil, and you're going to spend, a meeting lasts 1 hour. You're going to spend 50 minutes of the meeting talking about, small things, family, all of that, and then spend 10 minutes talking about business, right? Here's just the opposite. You start talking about business, get business out of the way, and you get everything done, and then the last 10 minutes you talk about your family and everything else.
How's
right?
Jimmy doing?
Exactly. So that, I think those were the big differences. In Wall Street, as I said, I did a little bit of everything. When I left, I was more on the kind of like in the executive side of Wall Street, which is something I didn't like because I was spending most of my time, talking about legal compliance, all of that, internal politics, and I like the trading side. I like to be following markets. I like to be with clients, right? That's what I always like to do. So when it started to be more on the corporate side, is when I said, well, maybe it's time to move on and do something else. But I think there were many horror stories, but since you asked, I think that the biggest one that I remember, like something that marked, I think, my time in Wall Street was 2007. It couldn't be different, right? 2007, think, and there's so many similarities to today also, because the whole time, 2006, 2007, we were looking back and we knew something wrong was happening. We knew assets were inflated. We knew that, real estate prices were too stretched. Everybody knew about that. Everybody talked about that. We actually priced a lot of protection to our clients. We went out and funny thing is that a lot of them didn't want to buy because first either they thought it was really cheap, but they thought it was too expensive, or they just thought, oh, this is just going to continue. I don't know what the timing is that it's going to turn, even though we knew that it was, that was unsustainable. But then I remember when 2007 came, and first Bear Stearns and then ultimately Lehman, and that's something that of course I'm going to remember for the rest of my life.
What was that? Any particular day? Was it like September?
Yeah, exactly. So Lehman. So at the time I was, without doxing myself too much, I was in one of the financial institutions that almost went down, right? And I remember going home on a Friday, and things were stressed, but not that bad. And at some point during that day on Friday, we actually thought, oh, maybe things are going to settle down and we're going to be fine. But then I got a call on Friday at around 11 o'clock at night from my boss, like, listen, I need you to come back to work. And I'm like, it's 11 o'clock at night. Like, no, you're not understanding. Our firm.
It's like margin call.
Pretty much, yeah. Our firm is going to be
freaks,
sold.
By the way, freaks, I have watched Margin Call now. Shout out to American Huddle for that recommendation. Sorry.
So, and he called us like, you got to come back here. We got to, we're probably going to be sold during the weekend. I need to get a good valuation of what the business is, how much you guys did in revenue this year. Just get me all those numbers as soon as you can. And and then we got that all done on Friday. And then between Saturday and Sunday, I didn't know if I had the job anymore, right? What was going to happen? And then Sunday comes, and then there's an announcement that we're being sold, and all of that was done just kind of completely, like, really, really quickly. And I'm very against intervention from government and all of that. I think as most people are, but I think at that point, I think we dodged the bullets because it would be worse,
We need $2 trillion or the economy is going to collapse. Who said that, Geithner or is it Geithner or
Paulson?
Paulson.
I think it was Paulson. Yeah.
Do you think it would have been worse if they did nothing?
I don't know. It probably.
Where do you think we'd be today?
So exactly. So that's the right question, right? I think that short term, I think people are very short term oriented. That's the problem. So short term, it probably would have been worse. Definitely would have been worse. Long term, I think would have been better. I think biggest problem that we have right now is exactly that we kept thinking for the last 40 years, 50 years, we kept trying to fix, and the Fed kept trying to fix these short-term problems, right? And they fix the short-term problems by creating bigger long-term problems, right? And that was the typical situation where if they did nothing, short-term would have been pretty bad. Long-term, it probably would have been better, right? The question is always, could the U.S. recover if one of the big companies went down, the financial system really collapsed? Who knows? I don't know, right? I think the problem was already much bigger from everything that was done before, everything that we know about. So at that point, I think they did the right thing. But again, they were just trying to fix a bigger problem that was done because of other things, right?
Yeah, but we're here now in 2019, over a decade, more than a decade away from that collapse, and we seem to be right back where we were. So we did 6 years of expansion. Monetary base went from 800 billion to 4.4 trillion.
It's insane.
And
insanity.
We've been tightening for 4 years now. So 6 years of expansion, 4 years of we were tightening for 4 years, and now we're loosening the balance sheet again. So let's talk about these repo operations. What the hell's going on? Is it QE without calling it QE?
Yeah, it's definitely QE, right? I mean, Fed doesn't want to call it QE, but it's definitely QE. There is injection of liquidity in the system, right? Somebody out there, and that's the thing that I really don't understand yet. And I asked many people, I talked to many people. I don't know what the source of this is, but there is a financial institution somewhere that is in need of a lot of liquidity, right? Why? We don't know. Is it because of distress? Is it because of short-term issues? We don't know yet, but this is not normal. That's absolutely not normal. And this is QE. It's an injection of more liquidity in the system, right? A system that it's already drowning in liquidity, and we're putting more liquidity into it, and it's going to pump the markets for a little bit longer, right? And as I was saying, I think that it's like. Good parallel is thinking there's a semi coming on the wrong way on the highway, right? You see it's coming the wrong way. You're just not going to stand in front of it because it's going to run you over. And there's so much money on the system that I think stocks are going to continue to go up, but who knows for how long, right? And
how do you transition out of this? Like is there anything... So you described that Brazil got its shit together in '94 and reduced its monetary base and figured out it's a monetary house. Do you think that possibility exists for the global economy right now?
I wouldn't say Brazil fixed it. I think Brazil just went from being like completely, like what Venezuela is, like printing money right away, to printing responsibly, right? Which printing responsibly is just printing. You're still printing. You're just printing in line with the rest of the world, right? But you're still printing. And again, I don't think they fixed anything. They just went from being in line with the rest of the world, right? For I think going forward, the answer is obvious, right? And that's why I think we're here. I think Bitcoin is the answer to the monetary problems that we have in the world. Is it going to happen in 1 year, 2 year, 3 year, 5 year, 10 years? Nobody knows, right? There's so many variables, and I think that's the thing that people still don't get is that this is a system with too many variables, right? We're looking at adoption is going to take a long time. And I'm talking about adoptions like to the mom and pops out there. I still don't see adoption with large institutional players, right? I'm still worried, like in some of the meetings that I go with institutional clients, some of them I don't want to talk about Bitcoin because I know, these guys are going to smirk and they're going to stop listening to everything else. And I'm saying, like, you're going to think, oh, this is a crazy guy that thinks about Bitcoin, right? And although they're starting to shift, it just shows you also that, in terms of adoption, we still have a long way to go, which is great, right? Because we're early on this. Price is going to be, I think, keep going up, right? And price drives everything. People say that price doesn't matter. I think they're wrong. I think price drives everything on this market because it's an incentive-based game theory market, right? Where the incentives are aligned to price, from miners to hodlers to everybody else, right? We all care about price and before anything else, right? If we say, I think we're
I'm in it for the tech.
It may make sense to get some just in case it catches on, freaks. No, but you were mentioning before we hit record that you think it's going to startle us, right?
You're going to what?
Startle us. You think we're going to be Bitcoin success is going to surprise us? Or?
Yeah, I think so. I think that first of all, forgot who said, but there was a podcast I heard recently. The guy said, "Oh, Bitcoin is like a truth machine, right?" And I think in a sense it is. And I think in line with that, there are going to be completely new things that we still haven't predicted that are going to come out and going to hit us from where we're not expecting in a positive way, right? And I'll go back to, I think, when the dot-com bubble started, I looked at all these companies, right? And one of the things that I did at the time was to research the technology companies. And I remember looking at all the search engines and all of that. And then fast forward to, I think it was 2004 that Google IPO'd. I remember 2004, 2005, something like that. And I remember when Google IPO'd, I looked at Google with my eyes of still a tech analyst. And I looked at it, I said, this is a search engine. This is way too expensive. There's absolutely no way that I'm going to buy this, right, at the IPO price. And boy, was I wrong, right? Because I couldn't see like this whole new market that they had with data analysis and all of that.
Couldn't predict the ad network that they'd be able to build.
Exactly. Yeah. And I think it's going to be the same thing with Bitcoin because even stronger, because I think here, as I said before, the incentives are aligned for everybody, and it's not a company that it's only internal to a company. This is open to anybody in the world, right? This is a process where we are all equity holders on the growth of this ecosystem, and because of that, it goes back to game theory, same thing, right? People are going to spend time on it. People are going to start developing on it. People are going to start to figure out some other things that are just going to come out of the blue and I think surprise us to the upside at some point. Yeah,
I mean, what surprised me most recently, last couple of months, is the rumors out of Venezuela that Maduro is actually using it to buy goods from other countries. Not that that's a use case. That's a pretty straightforward use case, but it's still nonetheless pretty surprising to see that it may be at the geopolitical game theoretical level right now at this point.
And they already know the price of the oil because it's what it costs for them to mine it.
Yeah, the price for
for selling oil. When Venezuela is selling oil, their alternative is they can mine with that oil instead, right?
Yeah.
Because they have in-house mining operations. So that's like their base level price. Like they don't even have to look at, if they in the future they wouldn't even have to look at like global markets. They would just know like this is the price. Where above that we'll take that price.
Yeah.
Yeah, and I think that we're hearing from Venezuela first, but I'm pretty sure that other countries are already investing in mining and buying mining equipment, because for them electricity is cheap. And think about a country like Brazil, and again, there's no evidence that this is happening, but if I'm in Brazilian central bank and I look at Bitcoin and I make a decision that at some point I need to put that in reserves, probably the best way to do it is through mining, right? Have free hydroelectric electricity in the country, right? Buy mining equipment, plug it in there, and then you start acquiring Bitcoin gradually, without making too much noise. And I wouldn't be surprised that some of the spike that we've seen in hash rate recently is coming from some of that in places off the world, right? I don't know, but it could possibly be.
Am I mistaken, or did Putin come out this week and say that they want to get into mining? I think
I didn't see that, but I wouldn't be surprised if they are, but they would never be. Oh no, there was a hit piece that was about different mining ops that are happening in ex-Soviet countries.
Oh,
and they were trying to say that Bitcoin was also used to pay to hack Hillary's emails, and it was just like a major hit piece. But they did have aspects where they were talking about the thriving Bitcoin mining sectors in all these different countries. And yeah, Bitcoin's the ideal money for Putin. But Putin's also not a fucking idiot, and he would never tell people that he's mining Bitcoin.
Yeah.
Right? So
I think that's what it was.
There you go.
The story you described. Austin Storms actually shared that with me. I only read the first paragraph at the get. It was Wired. Yeah.
It was a straight hit piece.
Yeah.
But it was a good article.
There's no incentive for any government to say that they are acquiring Bitcoin. There's zero incentive, right? At least at this point.
Don't show your hands, right?
Exactly. So I think that by the time that they tell that they are thinking about acquiring, they already going to have like stacks somewhere.
Global game of chicken.
Well, this brings up an interesting debate here, right? So, what would you? Well, I mean, I think I know what you guys will want more of, but what do you think will happen more of? Is governments mining it directly, or governments making so their citizens can mine with the easiest path forward? So I think Trump. I tweeted this out, and somebody yelled at me for involving the government in Bitcoin mining, but as I said, I think America should incentivize Bitcoin mining. And some people took that as government programs to incentivize, like giving out subsidies or grants to go mine Bitcoin. But I think you can do it with tax incentives, right? Say if you use X amount of natural gas that would have otherwise been just sent to the atmosphere, we're going to give you a Y tax break or something like that. And that's just pure market incentives, right?
And just like lack of regulatory burden, right?
Yeah.
It would be huge.
Yeah. And just incentivize individuals and entrepreneurs to go do it. And would you rather have your country secured by the government mining Bitcoin or the individual entrepreneurs?
Yes, and then you could always, down the road, you could raise their taxes, or you could give them national security letters.
The government's never do that.
Do you think it's a national security issue?
Yeah, I think it will be. And I think as a forward-looking person, it is already, right? I think governments that within the next 5 years don't have a Bitcoin strategy are going to have serious issues.
Yeah, I think they're thinking about that. The only thing, that having worked a little bit with government, that I think that it's the only reason why they haven't really jumped into this is that they're all very term oriented, right? So I bet that, whoever is making this decision, they just don't want to jump the gun, because if they're wrong, right, and they get, even if it is 0.1% of their monetary base into Bitcoin, and it goes wrong, personally it's going to hit them, right? So, but I think that's going to change.
We just need one more pump, because I feel like so many times.
That's what you were saying 3 years ago, dude.
But so many times with Bitcoin, when you hear people's like story of how they got in, they hear about it, they kind of dismiss it, and then they hear about it a second time, right? And this last pump, a lot of people heard about it, a lot more than previously. So the next time, and a lot of them are government officials, I think. So I think like the next time it happens, it'll be like this
for sure
legitimacy factor for them.
Yeah, just did a little mic adjustment there. That the thing always droops. The mic might be too heavy for that stand. But no, I agree. Like it will be undeniable. That is like, well, what is the tipping point for these officials to be like, all right, this is, I mean, it seems like it's already happening. Like people admitting, like Patrick McHenry, that it's not going anywhere.
Even Brad Sherman, he understands.
He does. Brad Sherman, what a villain. But yeah, like when is it the point? What is the point at which people are like, there is like a visible mad dash to get as much Bitcoin as possible?
And I think above all, we don't need it. Even if governments don't jump into this, right? It doesn't matter. I think that Bitcoin is much bigger than any of that, right? Anytime that I come from a school, economics background that, is very Austrian school oriented. So I want minimal government, sometimes I don't want government. My dream is that they don't get involved at all, right? And then this is what's going to free us at the end of the day. But we got to be realistic as well. And I think that, it's game theory again. One government's looking at the other, as you said, it's a game of chicken, right? And like, okay, if I don't do this, maybe China will do it, maybe North Korea will do it. So maybe I should do some, right? I should start some. And I think that's a risk, a positive risk that we're definitely facing. And I wouldn't, as I said, I wouldn't be surprised that there's something happening there already.
Yeah. So what, do you trade Bitcoin at all, or you?
No.
No.
So, and this is, I'm very, I've seen everything in terms of trading. Trading is very hard. Trading short term is very, very hard. Particularly on this market, because it's a market that tends to be sideways, and then explodes in one direction or the other. And
yeah, what's the quote if you miss 5 days of?
Yeah, so I actually, I wrote a web app for that you can just plug in and then you see that if I missed in the last 3 years, if I missed the top 5 best day periods and all of that. And it's just shocking, like the amount of returns you're gonna lose if you're just not invested. It's massive. So I think everybody, if you really want to trade, if you think you have an edge, which I definitely don't have, and I think most people don't as well. It is a losing game by definition, right? Because of fees and leverage and liquidations and all of that. It is a losing game at the end of the day. Who's making a lot of money with this is Arthur with BitMEX, right? Everybody else is losing money. But if you do want to do it, keep a stack that, this is my HODL stack that I'm not going to mess, and don't mess with it. Put it aside. Put an amount of money that, you're not going to need, but set it aside, forget about it, right?
The hard part is like not touching that after you lose the trading portion, right?
Exactly. And there's another thing, which, you guys been around for, at least a few cycles. And I've seen more people get out of Bitcoins when the markets go up than when it goes down. Because it goes up, you start to look at that stack, and you're like, oh, this actually now makes a difference in my life, right? This is real money, so I'm probably going to sell some of that, and you sell some of that, right? And then it goes even more than you're expecting up. And then you FOMO in and you buy more. So,
and then it goes down.
And then it goes down, exactly. So I don't think it's any market, any currency market, any commodity market is already very hard to trade. And this is not one or the other. It's kind of like different.
Yeah.
This is even harder because, you have fat tails in both directions. And the chance that you're going to be misallocated either in one direction or the other, it's massive. So I'm completely against trading. You know, I know a lot of people follow TA. I don't follow TA. It's not for me. I tried a few times. I actually studied a lot of TA in the beginning of my career. I had, there was one of my bosses that did a lot of TA, and I just saw him lose money, you know, time and time again. And I think that's probably why I don't like it, right? So we all have our own experiences to drive our thoughts. And I know people that make money with it, but I'm convinced that it's a small percentage of people that are really going to make money on this, particularly on Bitcoin. So I think the best thing to do, you know, and you guys are huge proponents of this, is just keep stacking, keep buying, you know, wait for big drops like what we had, you know, a month ago, get in, buy some more, right? Don't overdo it, but just keep converting as much as you can with time. I actually, you know, when I got into Bitcoin, it was right after Mt. Gox, so price collapsed, right? And I kind of heard about it before, so I was looking at it, but really not paying that much attention. But when price collapsed, I remember looking at it, it was around $100, and I saw the chart. I said, oh, this thing was at $1,000 at some point. Now it's at 100, and that got my attention. I'm like, okay, maybe, you know, maybe if this doesn't go to zero, which could, maybe it will go back to 1,000, right? So I started buying a little bit, and then I bought like at 100, 150, you know, a little bit at 200, and then it went up to 400, 500. Like, okay, this is a massive run. I'm gonna get out. So I got out, and then I wasn't allocated for a while, you know, and I kind of like left it on the side. And then by the time that I look again, it's above 1,000, which was where I was looking at, right? And of course, I bought everything back at 1,000, and it went down again. So again, I'm not the best trader, so I'm probably not the right person to ask that question. But you know, you guys see it on Twitter all the time. There are always people with calls here and there. I haven't seen anybody, with very, very exceptions, that, you know, through this whole period to 2015 to now, they're still making the calls, and that on average are right? And that on average would have also like a recordable metrics that you could follow, because it's very easy to say, oh, it may go up, but it may go down, right? And but you know, somebody that will tell you, like, I have a fund, or I have, you know, somewhere where I'm tracking my trade.
P&L sheet.
Simple P&L sheet. Yeah. You know, I would take the bet every day that in a period of 2 years, 3 years, 5 years, Bitcoin would outperform 95% of the traders out there. Yeah. Right? It's just again, it's a benchmark that is very, very hard to beat.
What are your thoughts on the future of Bitcoin volatility? I know Bitcoin team is a bit of a contrarian, thinks it's going to get more volatile from here. What do you think? So
I think one of the things that will drive volatility maybe down is the fact that we now have more options market, right? And you make money on options market not by buying volatility, you make money by selling volatility, right? So if you consistently sell volatility on equity markets, for example, you make money. Right, it's been, you know, one of the risk parity strategies that have worked for a long period of time. Why? Because typically implied volatility, which is what is priced in the options, is higher than historical volatility, right? So and there should be a premium for insurance, right? And if you actually look on Bitcoin options, and I actually started looking at this a little bit recently, implied volatility is very high. Historical is very high as well, but implied is very, very high. If you look at the Ledger X options, for example, 2020 options are trading at close to 90% implied volatility, and, you know, options that are like 7,000 strike puts, right? Mm-hmm. So there's a lot of premium to be gained there. So if you're systematically selling options, if you sell call spreads and put spreads, for example, you're capturing that premium. And I think that may drive implied volatility down, which doesn't necessarily mean that realized volatility is going to go down, right? Because it's the tail, it's not the dog, right? Mm-hmm. But ultimately it may, because remember that everybody that puts a risk trade out there, they need to hedge that risk somewhere. So by hedging that risk, you may actually see volatility being driven down. And also, you know, it's a market that it's consolidating. It's a market that, you know, I think that there's kind of like, there's significantly less, let's think about fundamentally, right? There's significantly less uncertainty today than there was in 2015. 2015, I remember putting a few $100s into Bitcoin and thinking this is going to go to zero, right? Like that was like clear in my mind. This is going to, I'm okay if this goes to zero. There's no chance that it's going to go to zero today in my mind. No chance, right? No, I mean, it's a completely different market now.
Why do you say that? What? No chance at all?
I wouldn't say no chance at all, but, because there's a chance for everything, right? But the chances are minimum. At that point, the chances were like significant. Think about a 10%, 15% chance.
I agree. I think Bitcoin's biggest hurdle is going from 0 to 1. Everything after that is...
Well, the market has matured tremendously. I mean, and just liquidity has gone up, and we have so many more exchanges, like on-ramps, off-ramps. I mean, I remember it used to be like, and it still kind of is, but every big move, like Coinbase goes down.
Yeah.
Right? And if Coinbase is dominating the volume and they're the only ones where you can trade, then a single exchange going down
really fucks up the market.
Increases a shit ton of volatility, right? Yeah. At that moment.
And but answering your questions, volatility going to go down or up? I think that I'm going to take the other side now, right? Because of that, there's a chance that volatility may actually go up. Because let's say, for example, we start a new run and we hit all-time highs. The on-ramps are all plugged in, so people may just decide and FOMO in and say, well, I just want to jump back in, and we may have this flood into the market that we haven't experienced before, and because of that, we may actually have spikes in volatility that are much higher. So I think what we're going to probably see is that volatility is gradually going down, but with maybe higher spikes in volatility than we had before. So the second derivative of volatility is actually going to be higher than what we've seen before.
You think we see a Bitcoin VIX-like derivative soon in the future?
Sorry?
Do you think we see a Bitcoin VIX-like derivative in the future?
Oh, yeah, absolutely. At some point, for sure. I have no question that we're going to have that. Technically, one could create an index already, right? Because we have options available. So VIX is basically just 30-day options on the S&P, right? It's a systematic index that it's constructed in. So the same thing we are going to see in Bitcoin. Actually, that creates me an idea. Maybe we should create something like that and put it out there, right? Using LedgerX API, and then it's an easier way to track volatility. The only thing that I think it's a little bit harder is that the strikes that we don't have many strikes in Bitcoin right now. So to pick, like, VIX is very straight in terms of like how much out of the money you are to create the index, but still I think it's something that's definitely absolutely doable. Yeah. And I think we're actually going to have a market into buying and selling volatility. Yeah.
So for you freaks that don't know, the VIX is an index that measures the volatility of the S&P 500 index. Very popular derivative.
Yeah.
What is it? VIX above 20, it's very volatile. It's like crazy, right?
Fairly high. Not crazy, but fairly high. Like 2007, we had the VIX spike to close to 100. Yeah. That's Bitcoin volatility. Yeah. And people forget risk very quickly, right? And they forget that, we had a period of 10 years in the S&P where the S&P didn't go anywhere, and up until recently. And we had a period in the S&P where the S&P volatility was close to, 70s, 80% as well. And I guarantee we're going to see that again. I don't know if it's going to be next month or it's going to be 3 years from now, but we're definitely going to see that at some point because prices are just, again, being inflated for the wrong reasons.
Yeah, no, it's crazy. And if you guys are interested in Bitcoin derivatives, in particular, CoinGecko actually just came out with a really good page, with a really thorough page with derivatives and options products across the market. So go check that out, CoinGecko. It's actually a really cool page. What I want to jump on from here, what was I going to say? Let me gather my thoughts here.
Just going back to that, I think that one of the strategies that we did in Wall Street, and this is interesting. I think that, and going back to your question regarding a volatility market for Wall Street, 2007, 2008, when we were looking to the market to buy protection in the markets, right? And I kind of touched this in the last time that I was in the podcast. And we looked into buying options in the S&P, buying put options. That's the first thing that comes to your mind, right? I want to protect myself, so I'm going to buy a put option on the S&P. S&P goes down, I exercise that option, I make money, right? The problem with that is that first you need to pick a period. So you're going to say, let's say I buy a 1 month option, right? So next month I need to do that again, and I need to do it again, and I need to do it again. So you're losing money until you make money. But the biggest problem is that the time that you really need the option, it's probably the time where volatility spiked up, and you're probably going to say, I don't want to buy it at this level of volatility, right? So you just spent, a long time of paying premium, and then the time that you really want to make money, first, the option may not perform as well because you're delta and other things, but second, it's probably going to be expensive, right? So one of the things we did a lot at that time is actually flip it around and do the opposite, systematically sell volatility on the S&P. And that actually worked really well as a protection because of periods of distress. What happens that the implied volatility, which is what's priced in the options, spiked significantly and significantly more than historical volatility, right? So you're capturing a lot of premium in times of distress, and that ended up being a very good strategy to protect portfolios at the end of the day, right? Of course, for the last 10 years, it didn't work. You would have lost a lot of money because, again, implied volatility is collapsing, historical volatility is collapsing as well. The premiums are very low, and then whenever you have a small spike, you lose a lot of money. But in periods of distress, that is a good strategy.
Play that ARB.
Yeah, and I think that it's something definitely to consider in Bitcoin, selling calls and put spreads and just getting the premium every month, right?
Yeah. No, and I finally remembered what I was going to transition to, and it just went up my head again. Marty, concussion Marty. Oh, exactly what I wanted to ask you. So, very interested to get your insights on this. The not rumors, just the theories that, not rumors. All right, let's talk about, so the CFTC ex-chief, Christopher G. and Carlo came out at a conference at the beginning of last week and basically said that the Trump administration gave the okay to the CFTC futures for Bitcoin because they wanted to, quote unquote, pop the bubble. So a lot of people think that these futures markets may be used to manipulate the price of Bitcoin and suppress the price of Bitcoin more importantly. What are your thoughts on this market structure? Obviously, you think these products are important.
Hard to say. At the end of the day, futures shouldn't drive direction one side or the other. It should just add liquidity to the market, right? So the liquidity will flow to wherever it needs to flow, right? So if there was a restriction in liquidity on the buy side or on the sell side, it would have flown that way, right? But by itself, it shouldn't pop a bubble unless you're in a market that is extremely restricted, right? Like think about a market where you can't sell short. You can only buy, right? In a way, it's kind of like what the U.S. equity market is. It's much harder to short a stock than it is to buy a stock, right? So when you add futures on individual stocks, you may actually give the ability for some people to kind of like bring prices down. I don't think it's the case with Bitcoin. I think we've had so many different options. BitMEX was around already. They had, BitMEX has massive volume. It's not open to U.S. clients, but U.S. clients have other options as well. So I think he's giving himself too much credit for that. Mm-hmm. It was a coincidence more than anything else, and he may just be trying to be more relevant, but who knows, right? But my personal view is that wasn't the reason for prices to come down.
It's hard to find a direct cause for a price movement, right?
Yeah, exactly.
Well, I mean, like the day the CME announced futures, Bitcoin was trading at like 9K, right? And then on like the eve of the launch, we hit 19. So like maybe we wouldn't have even pumped as high as we pumped this run if it wasn't for the CME to begin with, right?
And in a bull market, everything is good news, right? So markets, people just look at anything that come out and like they use that as an excuse to fear to buy a position and to accumulate more and to get more leverage, right?
But that was good news, right?
So that was good news.
Huge news.
Yeah, exactly. Because it's bringing more liquidity to the market. It's bringing more legitimacy to the market, right? Because now it's a market that is priced in the Chicago Exchange, right? And all of that. So it is good news, but it brings pressure to people that potentially short more. I haven't looked at the numbers. It would be interesting to see, what the kind of like the open interest positions were after it opened. I would doubt there is a correlation with price there, but again, I don't know. I haven't run the numbers.
It's the big gold bug theory is that the powers that be are manipulating gold prices via futures markets. What are your thoughts on the ETF? Do you think we need it? Do you think it's important? Do you think it's valuable? Will it have the same effect?
So we don't need it. It would be valuable because price dictates everything, and I guarantee price would pump significantly because of that, right? Of course. I mean,
Apparently, one just got okayed in Canada.
yeah, but I think the big one is the U.S., right? When we have one in the U.S. and everybody can come in and you can buy in your brokerage account, you can buy some Bitcoin, that is a game changer. There's no question about that. That's going to drive price ridiculously high very, very quickly, right? And I think ultimately is also going to drive price through. Same thing happened with gold, right? When we had the gold ETF.
Yeah.
And ETFs in general, when they come out, they tend to drive prices of the underlying assets up. I think with bonds and all of that, right? We've seen it time and time again. So I think when it happens, it's going to drive price up. And price is the most important variable in Bitcoin. So it's going to be good for Bitcoin because of that. Do we need an ETF? Absolutely not. If I am a purist and I say, listen, I think people should have their own keys and, at the end of the day, they should control their Bitcoins, and we don't have a huge Fidelity or whoever it is that issues the ETF that is holding like a massive position that could be hacked and all of that. ETF is bad, right? But again, I think the pros that we're going to get out of this in price are much bigger than anything else. So I would love to see an ETF to be approved. And I'll go further. I look at 90% of my colleagues in Wall Street. I'm not comfortable. I have a wallet where I hold Bitcoin for a friend of mine that I know that, there's no way that he can hold the Bitcoin because he's going to either lose the wallet or he's going to forget his seed or whatever it is. He's just not technical enough. And this is a guy that, again, it's Wall Street, it's not dumb. He's just not technology savvy enough to do this, right? So an ETF would give access to a lot of people like that. And there are, we kind of look at this, our Twitter bubble where everybody, we want to be purists and we want to hold our own keys. And that's what I do. That's what you do, right? And I think ultimately everybody's going to get there. But between where we are today and that point, we need other steps, right? And an ETF, I think my view is that it's an important step to that.
Yeah. It's Van Eck has been trying, getting shot down. What do you think their biggest hurdle is? It's very unclear at this point to me.
Yeah, again, having dealt with regulators in the past, it's hard to read into their incentives. And put yourself on the shoes of these regulators as well. Personally, they have a lot more downside than they have upside. Right? These are not guys that get paid bonus at the end of the year. I mean, they get paid bonus, but it's not tied to anything. There's no monetary incentive for them. If an ETF is launched and it captures, billions and billions of dollars, that's not going to change anything in their compensation, right? But if an ETF is launched and there is a hack and an ETF goes down significantly, they're going to be to blame. So they're in very tough shoes right now. That again, the pressure that they have on the other side is that if they don't approve this, right? I mean, they're
miss the boat.
Exactly, and it's innovation that that the U.S. needs, right? So I bet that they're getting a lot of pressure on that side, but personally, as an individual, right, whoever is making that decision, they're going to try everything that they can. My view, at least, is that to shut it down, right? There's very little on that for them.
Yeah. No, it's just been. It's something we've been parroting on TFTC for a while. Is don't hold your breath for the institutional money. It'll be really good when it comes. But it's been pretty hard for them to get these products out there. I mean, LedgerX. I think I'm actually speaking with Paul tomorrow, and their situation with the CFTC seems a bit very competitive, if you will. But one thing I'm interested in, have you been following the debate around the stock-to-flow model?
Yeah. I mean, I think as everybody else, I've been looking at it.
So what are your thoughts?
I think it's a very good model for the long term, and I think ultimately it's probably going to play out if we go into hyper Bitcoinization, right, of the world. But again, I think it's too early to know, and I think that the orders of magnitude we are talking, it doesn't matter if the model is right or wrong. I think fundamentally it makes sense. I also think it's a very good story to tell, right? I think it's something that the people that you go out and you tell them when you put it in terms of stock to flow and you compare to other commodities and they can see it, and then they kind of start to understand the value of a limited amount of Bitcoin out there and the limited amount of issuance of Bitcoin out there. So I think the value is more in that than anything else, right? And how people are gonna look at this, right, and the story that you can tell. And I think that again, a very limited number of data points, but so far it has been proven to be right.
It's a pretty impressive model up to this point.
Yeah.
Yeah, don't tell Bitcoin Tina, or a lot of it's a lot of contention right now, because I do believe that if you can stomach the assumption that Bitcoin's network effect gives it gives it an advantage over other blockchains, I think that does make sense to apply to the.
There are no other blockchains. No, I'm dead serious. There are no other blockchains.
Why do you say that?
Because, again, I think Bitcoin already, you look at any metric that you want, right? Look at hash rate, look at market cap, and I know market cap has its flaws, but Bitcoin is far beyond anything out there. And again, I think the way that I looked at this coming more from the economic, the game theory side, I never really looked into the tech side, and maybe I'm wrong. Maybe there is something that's going to come out there that it's completely different, but I don't believe so. I think that, everything that I look, the market is proving me that Bitcoin already won this game, right? And if something comes out, I think that at this point, there's so much adoption, so much development behind Bitcoin, so many people behind it, that if something comes out of other coin that is very, very good, Bitcoin is going to try to adapt to get that, right? The incentives are completely aligned for that to happen.
Yeah, no, it was what I wrote about this morning was basically, I'll fix that in a second before I get to this, or after I get to this. But what I wrote about was, what did I write about? I wrote about BitMEX Research just put out a research paper on Bitcoin's timestamping mechanism, and specifically around difficulty adjustments. This mechanism is very important, and what we found when Bitcoin Cash had to do their emergency difficult adjustment, it really fucked up their blockchain, specifically with difficulty adjustments, and made them more susceptible to miners mining blocks a lot faster. And this one time-stamping mechanism, just one part of the design, Satoshi thought it through so thoroughly. And he wasn't even a good coder, so that's the point I make. Like, Satoshi wasn't a good coder, but like from an incentive design system, he was like Michelangelo. Like the incentives are such that the tech is almost secondary to the incentives, I would argue.
Exactly. It's exactly right. It's all about incentives, right? And everything is aligned, and the difficulty, same thing. Like we hear about the death spiral and all that. Doesn't matter, right? Because the incentives are aligned. If the death spiral happens, difficulty is going to come down, and we are going to ultimately be fine. So
one of Matt's favorite topics, the death spiral. You and Ari going back and forth, man.
Yeah, I mean, apparently he wasn't calling for a death spiral, so guess there's that. There'll be more. Next cycle we'll have death spiral fight again.
It's not done. We haven't proved it. We have all the tweets to retweet the next time.
Exactly. All these cycles now, I just have a database of tweets to retweet. You don't even have to send out originals.
Yeah.
And we were talking about the ETFs, just to go back to that a little bit, because you kind of touch into the institutional side of the business. And, everybody says, oh, institutions are here, institutions are already investing. They're not. At least my experience with the people that I talk to, as I was saying, I'm still embarrassed in some of the meetings to talk about Bitcoin, because I will get the eventual smirk, or somebody will look at me like, oh, this is the crazy guy that's talking about Bitcoin again. And that happens still to this day a lot with some very large family offices. You go meet with them, and you talk about, typically what I'll do is that I'll talk about different asset classes, so about equities, commodities, and then eventually when you get to currencies and commodities, that's kind of like when the Bitcoin conversation, I hint things here and there that, I just wait to see if they get the bait, and they will talk about Bitcoin. And it's one out of, I don't know, maybe 15 family offices that will say that they are doing something actively. A lot of them will say that they're looking at it, they're researching, but pulling the trigger and having invested is like a minority of them. And most of the ones that are investing are the ones that come from founders that have technology backgrounds. Because then the founders will tell the family office, like, hey, I heard about this. I went to a VC dinner or whatever it is, and somebody's investing. I want to buy some. So it's coming from the head of the family,
side.
The client side, exactly.
Do you think Bakkt helps at all here?
It is more liquidity, for sure. It helps. It's a different vehicle. Having Bitcoin settled futures is definitely good for the market. it's pretty good to see how much volume they're picking up in the last few weeks, right? Now it's actually decent. I'm a little surprised how they launched, and I would have expected them to launch with kind of like some demand already lined up in the background.
Like market makers or something.
Exactly,
What is going on?
They had 70 Bitcoin worth of volume the first day.
But maybe it was by design. Maybe that's what they wanted to do. I don't know.
Ease into it.
I don't know exactly. I don't know.
It's still negligible volume compared to CME.
It is, yeah. You're talking about, at most I think they did like 1,000 Bitcoins a day.
It's the one thing I messed up on our chart a couple weeks ago. The CME contract's got 5 Bitcoin underlying. Back's only got 1. So
each contract is 5.
Yeah, I'm pretty sure, or 6, 5
6,
or 6.
I think 6.
6, yeah, 6. So it's 6. So you got to multiply the CME volume by 6 and compare it to back to then.
Yeah, I mean it's a minuscule amount.
Yeah. The most amount, I think that what's really drives short-term prices, it's still the leverage that you have on Bitfinex, BitMEX, all of those exchanges. 100 times leverage is something that, the first time that I saw that, I'm like, this is wrong. There's absolutely no way that, you can get 100 times leverage.
It's just marketing. No one really uses that, supposedly.
Yeah, the average leverage on BitMEX is like 7.5x or something like that.
Yeah, said.
Yeah,
I mean, we saw in both directions when we went down like 2000 relatively quickly. It was like $180 million worth of liquidations on Max
$500 million of liquidation.
When we went up, right? When we went to 40%.
Again, yeah. So
insane.
It's insane. So people are leveraged definitely too much, right?
$500 million.
So it's crazy. It's insane. So that kind of like, it's an animal that feeds on itself, right? Because price starts to go up. You have these liquidations, right? And then, in order to have the liquidations, it's somebody that's short. They have to buy it back, right? So, they buy it back to close the hedges because somebody's hedged somewhere, right? And that just keeps driving it up. So we have these explosive moves up and down, right?
Yeah, the liquidity crunches are very, very crazy in this asset class. Is that surprising?
Stack sats and make it more liquid.
So let's venture into somewhere else for a little bit here. You said you're running triathlons. What's that like? How'd you get into triathlons?
Yeah, actually, I'm a long time ago. So when I got into this was, I think when my daughter was born, I was 30 pounds overweight. I had like massive migraines. My cholesterol was off the charts. So, I kind of like went through a little bit of an existential crisis. I look at my daughter like, I'm going to die at some point, working like crazy hours in Wall Street, traveling like a crazy man. And I thought, I got to do something. And I remember exactly the day where I decided to make a change was the day that, I used to work down at Wall Street, and I used to catch the ferry every day. So one of the days I'm coming down, I try to run for the ferry, and it's like, I don't know, maybe a 200-meter run. I get to the ferry and I'm like shaking uncontrollably. Like, I got to do something about this, man. So the next day I went out for a run because I thought, since I'm traveling a lot, I can probably just run anywhere I go. I take my running shoes. So I ran for 10 minutes, and of course I came back home sweating like a pig, my legs are like shaking, and this is not right. And I'm like in my early 30s, and I'm gonna have a heart attack. And then I go to the doctor, and of course, my blood exam comes like horrible in terms of cholesterol, everything. So I started running. And Wall Street used to have this 5K that they did every year, the running of the bulls. I don't know if they still have that. And I signed up for that. And then I did a 5K, and then a 5K led to a 10K, led to a marathon. And then after a marathon, I got a, it's a typical Wall Street A-type personality, right? Oh, I'm going to do an Ironman.
Take it to the extreme.
And no idea what you're doing, right? And they're just jump into it. So I did in 2010 my first Ironman. And since then I've completed 10 Ironmans.
Damn.
I've done 12. 2 of them I didn't finish. I've done ultra marathons, and again, I think this is a huge part of I think my life and being able to do other things. Because if you don't have balance, if you, I always look at life like in 3 different points, right? You have your health, you have your professional life, and you have your family. If one of them is not in balance, right, the rest is going to suffer. So triathlons is where I kind of found the
Like balance
the
point. health.
balance, yeah, for my health side. And
What's it like preparing for an Ironman? So how long are Ironmans? There's you
yeah,
can go hundreds,
so you
120 miles, right? And some-
in miles, you swim 2.4 miles, you bike 112, and then you do 42 kilometers run, a 26-mile run at the end, a marathon at the end, right? So it will take, my fastest one I've done in a little bit less than 10 hours. My slowest one I've done in 12 hours and change.
how do you stay active for 10 hours straight?
Yeah,
What's that even like?
You'd be surprised. I think that your body can do things that you don't know it can do. It's just like stacking sets. You start slowing, start building, right? I had to get the parallel there. And then, before you know it, as I said, I started with a 5K. A 5K for me, I could, when I did a 5K, I couldn't even think about completing that thing, right? But again, we can all do, I think, much more than we think we can. And as you start training, and then honestly now, this is probably gonna sound wrong, but I look at an Ironman now and it's like, no big deal. Anybody can do it, right? Mm-hmm. And I mean it. I know that anybody can do it if you really, think about training and you be disciplined and.
It's mind over matter.
Yeah, exactly.
That's when back in my athlete days, I used to be in very good shape, freaks. But that was I used to work. I'm getting back into it too, but mind over matter. Like when you're doing like a long run, just like the faster I run, the sooner I'll be done.
And some of the best thinking that I get, it's during long bike rides, doing long runs, because you're just, today we have too much of electronics, so we're always on the electronics. So when you go out on a run, when you're out on a bike ride, you're not looking at anything, right? You're inside your mind, and it gets you to think a lot about different things. And I think that's one of the biggest values that I take out of it, is that it's my time to really be introspective and forget about the
Do you listen to anything while you run?
Running sometimes. I actually listen to podcasts sometimes while I'm running, but there are a lot of times that I prefer to just, shut it down. Sometimes I'll run, most of the times I'll run with a GPS watch, but there are times that I just don't want to run with anything, just disconnect, because that's the purpose of it, is to disconnect and kind of like think differently. And bike rides are even better, because on bike ride, you can't have anything in your ears because you have to listen for cars and things like that. Right. And in terms of hours, I'll go out on a bike ride for 5 hours, 7 hours.
Jesus.
And you're not, imagine, listening to anything. You're going to think, I used to tell my wife, like, listen, I have a problem. I go out on a bike ride. If I come back with the same problem, I'm probably not going to find the solution to the problem. It's not within me, right?
That's a good heuristic to use. I like that.
Yeah.
It's a good story. Like, so you're in your early 30s when you got into this?
Yeah. So now I'm in my late 40s and still doing
ripping.
it. Yeah.
Looking young and spry.
Thank you.
So thanks again for coming in, dude.
That's my pleasure. Thanks for everything you guys do. As I said, this is one of the best podcasts out there. I learned so much from you guys, and that's yours. And I think that, there are a lot of people out there that look at their Bitcoin experience, and a lot of it they owe to you guys. That's serious about it. Yeah.
Thank you, dude. That's why we do it.
Thank you. Yeah, and like I was telling you before we hit record, I stumbled into this. I was forced to start a podcast by somebody who wanted to learn more about Bitcoin. I'm just very fortunate to have been serendipitously in that position. And is there anything Bitcoin-wise, parting notes, you want to, any thoughts about that we haven't covered that you think? Well,
as I said, just stay humble, stack sats.
Yes.
And that's serious. If you really want to get into trading, think twice before doing it. Make sure that you don't do it with huge amount of money, and because chances are you're gonna get hurt.
Yeah. That's I can confirm that sentiment right there. It's not worth it. Especially if you don't know how to trade. You're talking to somebody who's traded in his life before. It is not easy to just jump into.
Yeah.
Alpha Zeta, it's been a pleasure meeting you in person. Breakfast was lovely. I hope you enjoy your afternoon trick-or-treating in Hoboken.
Thank you.
Matt, anything?
Love you guys.
Peace and love.
Peace.